Today, we will talk about environmental issues in financial accounting and reporting. Chapter 7. In this chapter, we examine environmental issues in financial accounting and reporting, and in financial analysis also, because these environmental issues influence the risks and opportunities any company may face. The main environmental issues in financial accounting and reporting include the recognition, the measurement, and disclosure of environmentally related economic impact on business. You have to know that examples of environmentally induced financial impact on companies include environmental charges, fines, and reduction of heavily polluting production devices, and environmental liabilities. The main emphasis within an environmental context will be on 4 items. Number 1, classification of environmentally induced outlays as asset or as expense. Number 2, environmentally induced expenses. Number 3, environmentally related financial impact on assets. Number 4, environmental liabilities, contingent liabilities, reserves, and provision. We will start with number 1, classification of environmentally induced expenditure as asset or as expense. Number 1, environmentally induced costs as asset or expense. This issue, or the issue of whether environmental cost or expenditure should be capitalized or expensed, is one of the most controversial subjects for accountants as well as for financial analysts. Under conventional financial accounting, the difference between an expense and asset is very clear, and we'll review it. Of course, you know that an asset is defined as a resource controlled by entity as a result of past event, and from which future economic benefits are expected to flow to the entity. Again, an asset is a resource controlled by an entity as a result of past event, from which future economic benefits are expected to flow to the enterprise. While an expense is defined as a decrease in the economic benefit during the accounting period in the form of outflows or depletion of asset or occurrence of liabilities. Of course, you know also that an expense is a cost that has led to a benefit and has now expired. Expense is a cost that has led to a benefit but now has expired, whereas a cost that have been incurred and can lead to future benefit are classified as an asset. Again, you have to note that an expense is a cost that has led to a benefit but now is expired, while cost that has been incurred and can lead to future benefit are classified as an asset. Environmental investment or outlays or expenditure, same meaning, as defined by Canadian Institute of Chartered Accountants, are those undertaken to. So, any environmental investment as defined by CICA are those that undertaken to either prevention cost or clean-up cost. Either prevention cost or clean-up cost. Prevention costs are costs to prevent or mitigate environmental damage or conserve resources, while clean-up costs are clean up past environmental damage. We will start by number 1, which is prevention cost. Number 1, prevention cost. Canadian Institute of Chartered Accountants identifies 2 approaches to answer to the question of when to capitalize environmental cost. When to capitalize environmental cost. Or, in other words, when to classify environmentally induced outlays or expenditure or investment as an asset. We have two approaches. Approach number one is the increased future benefit approach, or IFB approach. Approach number two is the additional cost of future benefit, or ACOFB approach. Approach number one, which is the increased future benefit approach, or IFB approach, argues that the environmental disbursement or environmental expenditure or cost, the same meaning, disbursement is an expenditure is a cost, has to result in an increase in expected future economic benefit from an asset. So, according to approach number one, which is the increased future benefit approach, the environmental disbursement or expenditure must or has to result in an increase in expected future economic benefit from an asset. While approach number two, which is additional cost of future benefit, argues that environmental cost can be capitalized if they are considered to be a cost of the expected future benefit. Considered a cost of the expected future benefit from an asset, regardless of whether there is any increase in the economic benefit, but it may result in environmental benefit. From an economic perspective, capitalization of environmental cost should be allowed only if this cost contributes to additional future economic benefit beyond those originally assessed, which is incremental future benefit as an IFB approach. While from an environmental perspective, capitalization, environmental cost, and therefore the additional cost of future benefit, which is approach number two, should be favored if pollution prevention creates future environmental, not economic benefit. So we have two perspectives. From economic perspective, capitalization of environmental expenditure should be allowed only if this cost contribute to additional future economic benefit, which is approach number one. While from environmental perspective, support approach number two says that capitalization of environmental cost should be favored if pollution prevention create future environmental, not economic benefit. Also, you have to note that in special cases, not all cases, just in special cases, the cost of cleanup or pollution prevention may qualify as an asset if they are necessary for the company to just stay in business, even though they don't affect expected future benefit or future cash flow. In this case, environmental expenditure is just securing the value of an asset. Just securing the value of asset. A value that would fall, decrease if this environmental expenditure were not made. This is a very important note. Number two, clean-up costs, which is number one is prevention cost, number two is clean-up costs. Clean-up costs could also be argued that most environmental protection activities, clean-up costs, are expense. So clean-up costs are classified as an expense because they reflect a repayment of debt or a liability to society and natural environment. From this perspective, clean-up costs associated with environmental or the costs associated with environmental cleanup costs should be considered as an expense because they are imposed by higher authority, which is governmental or government environmental policy. For example, the purpose of environmental cost is to use certain land properly and protect the public rather than to create a more valuable commercial asset. So, in this case, the pollution in the contaminated land is seen as an increase in the liability of the company towards society, towards the natural environment, or the public. So, the cost of reducing this liability in the contaminated land should be expense, not recognized as an asset. Summary of all the previous: FASB, Financial Accounting Standard Board, and IASC, which is International Accounting Standard Committee, recommends that expensing fines, fees, cost of past environmental impact, which is cleanup costs. So cleanup costs, as recommended by FASB and International Accounting Standard Committee, are expensed, while FASB and IASC recommend that capitalization is allowed if a future economic benefit, not just merely environmental benefit, is expected to result from present expenditure. Also, costs that do not lead to future economic benefit should be expensed in the period in which they incurred. So, Financial Accounting Standard Board, FASB, and International Accounting Standard Committee, IASC, recommend that clean-up costs are expensed, while prevention costs are capitalized if they result in increase in future economic benefit, not just merely environmental benefit. Again, FASB and International Accounting Standard Board recommend that expensing clean-up costs and capitalization for prevention cost if they are result in increasing future economic benefit, not just merely environmental benefit. Issue number 2, treatment of environmentally induced expense. Environmental expense is defined as environmental related costs that have been provided a benefit but now expired. Despite the magnitude of environmental expense in many industries, still till now, no financial standard require separate recognition for environmental expense. Till now, despite the magnitude of environmental expense in many industries, we don't have financial accounting standard that require a separate recognition for environmental expense. Also, you have to note that environmental issues are a very important part of risk structure analysis of the company, where important material should be disclosed separately if environmentally induced financial risks are to be transparent. So, environmental issues are a very important part of risk structure analysis of the company. Otherwise, investors will be unable to assess the level of risk of their investment. So, environmental issues are a part of a risk structure of any company. Also, separate classification of environmentally induced expenditure from other expenditure is needed because a classification of environmentally induced expenditure from other expenditure would allow the investor and other financially interested stakeholders to have a full picture of economic performance as well as the future opportunities and problems of any particular company. So, a classification between environmentally induced expenditure or environmental expenditure from the other expenditure that the company has would allow investor and other financially interested stakeholder to have a full picture of the company performance and the future economic opportunities and the problems the company may have in the future. In addition, the mere differentiation between environmental induced expenditure from other expenditure does not provide the necessary information for all investors. I mean that separate classification of environmental expenditure from other expenditure is needed, but just mere classification of environmental expenditure from other expenditure does not provide the all necessary information that the investor and other financially interested stakeholder would need. At least we need one more distinction. At least we need one more or one further distinction would be very useful in this case. This distinction will be between expenditure incurred to improve environmental record versus environmental expenditure incurred because of breaches of environmental law. So, a classification between environmental expenditure from other expenditure would be needed, and it's very important that allow investor and other stakeholder to have a full picture of economic performance and the opportunities and the problem of the company. But just mere classification of environmental expenditure from other expenditure does not provide the all necessary information the investor and other stakeholder would need. So we need at least one more classification, or at least one further distinction would be useful. This distinction between expenditure incurred to improve the environmental record of the company versus expenditure incurred because of breaches of environmental law, just as fines. Furthermore, expenditure to improve company environmental record would be subdivided into two items. Number one, expenditure or outlays incurred for repair, reduction of environmental damage. Number two, expenditure incurred to prevent environmental damage. So, expenditure that made to improve company environmental record would be or should be divided into two things or two items. Item number one, expenditure or outlays incurred for the repair, reduction of environmental damage, and number two, expenditure incurred to prevent environmental damage. Of course, repair or reduce something is very different from prevent this thing. For example, for investors and other stakeholders, there is a substantial difference if, for example, one company spent $1 million on cleanup costs, whereas another company spent $1 million on prevent pollution. Again, there is huge difference, substantial difference between two important things. For example, one company spent $1 million on cleanup costs and another company spent $1 million on prevent pollution. Environmental expenditure should be analyzed in a manner appropriated to the nature and size of the business and or the type of environmental issues relevant to the enterprise. So again, it's very important to differentiate between, for example, two companies. One company spent $1 million on cleanup costs, which means there is already an environmental damage happened. Whereas another company spent the same amount, which is $1 million, on prevent a damage or an environmental problem before they occur, which is on prevention of pollution. So, huge difference or substantial difference between cleanup costs and prevention cost. Cleanup cost means that there is already an environmental damage happened, and the company spends this amount of money to clean up the damage. While prevention cost means a company has made an effort to prevent the pollution. So there is a huge difference between these two companies.